In Texas, the insurance market is structured to encourage competition on both price and service. Companies that don't compete effectively lose business to competitors. The Texas Department of Insurance does not set or approve home or auto insurance rates, but it does make sure that those rates comply with Texas law. TDI actuaries review thousands of rate filings each year. Actuaries are professionals trained to price insurance products, manage risk, and model the financial impact of future events, like weather disasters. Companies use their actuaries to set rates. TDI uses its actuaries to check their work. Texas is a file and use state. State law requires companies to file rates with TDI before using them. The law also requires that rates be adequate, not excessive, based on sound actuarial principles, and not unfairly discriminatory. State law allows for a range of acceptable rates. Companies have the flexibility to set rates that work for their business and can compete in the marketplace. TDI reviews all rates to ensure that they comply with these standards. If TDI objects to a filing that's already in use, the commissioner can order refunds. Insurance companies submit rate filings to TDI through SIRF, the System for Electronic Rates and Forms Filing, an online application used by most states. Since rates are based on the risk of losses in the future, rate filings must include forward-looking calculations, assumptions, and modeling. A single rate filing can have thousands of pages of data and exhibits. Filings include a rate and rule schedule. This section lists the percentage of indicated change. This is the amount the company says is needed to cover claims, expenses, and make a reasonable profit. The average rate change for policyholders, and how many additional premium dollars the rate change will produce for the company. The rate and rule schedule also shows how many policyholders will be affected. Not everyone will see the same amount of change in their premium. Some policyholders will get increases while others see no change or even a lower bill. This variation is due to individual risk factors like the construction type, age, and location of a home. TDI actuaries look at not just the overall average rate change, but also all these individual risk factors. TDI actuaries review the company's supporting documentation to determine if a rate change is needed and complies with Texas law. The supporting documentation includes a filing memo describing the rate change. Companies can use a number of different formulas to show why a rate change is needed, but no matter the methodology, the goal is to compare past premiums, losses, and expenses to project future premiums, losses, and expenses. This requires adjusting historical data to current day levels in order to make accurate projections about what costs can be expected. During the rate review, TDI actuarial staff contact the company whenever they need more information or an explanation of some element in the filing. These communications are how rate regulation takes place. TDI staff raise objections on nearly 75% of rate filings. When an objection is raised, companies have to respond by making changes, withdrawing filings, or starting over and submitting a new one. These efforts save consumers tens of millions of dollars each year. But the ultimate check on prices is competition between insurance companies. If your home or auto insurance bill is going up, ask your company to explain the increase and ask if you're getting all available discounts. You might need to shop for a better deal.